before the street could not afford to ignore it.
Oh yeah, and when you're in such a roaring bull market, you don't want to ignore anything that's left on the table when it comes to value. Thanks for that, Mangalam, for all the inputs over there. Let's take it forward with Abneesh Roy. Abneesh, really some of the memes that are doing the rounds, they are hilarious to say the least. But on a more serious note, the valuations were always on ITC's side, but in terms of the next growth kicker, on the FMCG business, what are the kind of numbers that you've baked in for now?
Yeah, of course, why the stock has moved up, I'll just address that bit first. So clearly today, the new development is essentially parliamentary panel has also advised the parliament and government to take up FDI in tobacco. If you see tobacco, FDI is completely banned. And this will essentially open up more opportunities for cigarette companies in general. Second, of course, is the GST meeting is there tomorrow. Every time GST meeting used to happen, investors were worried whether something would happen on the cigarette taxes. But so many GST meetings have happened, and now confidence is there that it's more important to monitor the union budget rather than the GST meeting. Yes, tomorrow we expect that the compensatory cess tenure may get evaluated. That's a non-event. That's neutral event for cigarette companies. Now, coming back to fundamentals of the business, yes, FMCG company is focusing a lot. All their inorganic opportunities have scaled up very strongly in all the cases. Apart from that, company is focusing more on the improvement of margins and volume growth both. So we do expect more inorganic opportunities in FMCG. First time company also shared more details on their tech business, and we expect their tech business also to participate in the broader tech very strong demand. In terms of the underperformance with the rest of the pack, yes, this year is going to be good for cigarette business. There was no tax increase if you see in the last 18 months. So which has made the illegal segment start losing market share. So we expect in the balance 9 months, so we are ignoring Q1 for both this year and last year. For the balance 9 months, we do expect around 8 to 10% growth for the cigarette industry because the illegal cigarettes will lose market share. So we expect more up move in ITC. We have a target price of 241, but given the euphoria in general, we expect more upside if we see more clarity on what happens on the hotel value unlock and on rest of the businesses also. If the path becomes more clear in terms of inorganic and FMCG, what would be the long-term plan? I think those would be very good triggers for the stock, medium-long.
Sure, Abneesh, just stay on for a minute. There are some big milestones being hit. The Sensex has hit 59,000 for the first time ever. I know every day is a record day, but that doesn't mean we don't celebrate it, right? Just look at that, 59,000, huge move in the Sensex. And this has been a secular run. I mean, even if you look at it today, of course, ITC is participating only today, but the rest of the market, I mean, Reliance is up almost 2%. It's been a 25% move in Reliance this year. I mean, that's a large cap moving 25%, no mean feat at all. So big milestones getting scaled. And right now, actually, the market is picking up solid pace. The Bank Nifty, as we speak, is up 460 points. Abneesh, just coming back to ITC, I remember having this discussion with one fund manager about a month or two ago when ITC was still underperforming while the rest of the market was shooting up. And he told me that in the ESG index, ITC ranks very low purely because of the nature of its business. And that's the reason a lot of foreign investors are now staying away from such, tobacco related businesses, etc. On that note, how do you rank ITC? And, what would the way forward look like?
Sure. So, in fact, ITC has tried to proactively address this in some of the ESG indices, global indices. ITC, in fact, is right there at the top. So, they are taking a lot of proactive steps in the rest of the business to improve on the ESG score. Second is now in ITC also the retail HNI participation is also very good. And second is there are non-ESG focused funds also. We are taking exposure because of the very good valuation comfort. So I would expect that with now less than 45% of the business in terms of sales coming from cigarettes, ITC should not necessarily be seen as a cigarette company. Yes, 85% of the profits come from cigarettes, so that's also very important. But clearly the non-cigarette portfolio is going to go much faster. In hotels also, they want to double the business through non-capex mode, through management tie-ups. In FMCG, as you also highlighted, they have very aggressive plans and they are going the right way, not diluting margins, improving margins also. So I would say ESG remains a concern, but that's already factored in. Last 5 years, we have seen massive derating for cigarette stocks globally and India. That already has played out. So from here on, I think what really matters is value unlock in some of their business. And this year, till February, I think for cigarette business, it's a good time. The next key monitorable for cigarette will be the union budget in February. I would expect a moderate tax hike to happen in cigarettes that point of time, but that's still 5 months down the line. So till then, I think more upside is left in the ITC stock.
Okay, more upside is what Abneesh is expecting on ITC after this big move that we've seen today. Abneesh, thank you so much for joining us and giving us your take on the stock which has taken all the attention from the markets today. In fact, we'll slip into a short break now. Jay Thakkar of Marwari Shares and Finance will join in with some trading strategies on the other side of this.